Hey traders, Nick here doing homework to get ready for the week. Try to watch the whole thing because there's a lot to unpack. I'll start with what happened last week with the scoreboard. The score was very green. It ended on somewhat of a sour note, but overall the Bulls won, hands down. There were some weak spots. I think the weakest high profile company is Apple. It cannot afford to lose 170. Overall, we are still buying dips. So the minute we have a couple of red ticks, assume the bulls will buy the dip and make a higher high. So that is the cautious thing to do. I want to remind that the bulls and the bears are liable to make mistakes at turning points, and we may be approaching one. The bulls are overly confident, so they tend to go in blindly too late. The bears are overly upset. They tend to want to short everything just in spite. Don't do either of those two. The only way we can handle our emotions is if we take a tiebreaker, and that's data points on the charts. Those are actual data points. There's no emotions in those. So let me zoom in on the daily. This is the S&P SPY. Oh, by the way, we did say once we broke out of 460 on a weekly basis, this point right here and this point right here, that the target area would be up in this range. 530 to 560 is doable. Don't anticipate the top until you see signs, and there are no signs yet. There are some little chips in the armor, but no clear signs of problems. So let's go into the QQQ, because that's where the largest companies on the planet live. The top 6 or so are about half the NASDAQ, and I'm going to zoom in to a lower time frame, and I'm going to give us some specific things to look for. How will I see signs of a top? I'm going to give you specifics that will work for this week. The bulls have a potential catalyst, which is where they failed Thursday. They take that out, they're going to continue to march higher. That's it. There's no top because we just made a higher high if that happens. Secondary for the bulls is that they have support just below Friday's lows. That's like a 1% drop, 1.5% drop. They can absorb it, no problem. The problems will start when they lose 432. Once they lose that area, then we start looking like, okay, we may be seeing a top forming, especially if they lose 422. Now, this is miles away from current price. So it all starts with not breaking out of Thursday. If we break out of Thursday, this conversation gets sidelined for another week. IWM, on the other hand, they're struggling to break out from a 2-year-long stall. They almost did it the other day. They almost did it above 210. That was surprising. And then this happened this week with Powell. I thought, uh-oh, there we go. They're going to bust right through it and then explode. Nope, they stalled right there, just below that top. And now they fell back into a prior problem area, 205. If you look left, you can see it right here. And it makes sense that they reverted to it. The small caps need to hold the Powell bar, and they need to not lose 199. And this is the calendar I use. We have Fed speaking. We have a couple of auctions on bonds. We have some housing information coming out. More auction for bonds, and I believe the big one would be on Thursday, because you will have the GDP. This is an actual quarter-over-quarter final. It's not an update. And we also have some PCE information, which are inflationary, like they will tell us about inflation. And then Friday, here's the big one. The markets are closed. We have PCE year over year. The other one was month over month, I believe. And we also have Powell speaking. Oh yeah, he needs to speak on Friday when the markets are closed. If you want to assume something, assume the bulls are going to win, and when you see them not win, then you act once we cross the lines we just addressed.